1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.
Hello and welcome to this edition of Morning Trade on Moneycontrol. I am Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the trade setup, the sectoral trends, the stocks to watch out for in today's session, and we'll also be getting your queries answered by our expert on the show. But before we do that, let's take a look at what the global handover is looking like this morning. Well, it was a mixed close on Wall Street, but the Dow managed to clock a 3-day winning streak. Stocks in the Asia-Pacific trade higher, while the SGX Nifty signals a lower start for the Indian market. In key earnings to track today, automakers Bajaj Auto and Tata Motors will report third quarter numbers. From the pharma pack, Cipla and Dr. Reddy's too will be announcing their numbers. Also on the show, it was a stellar quarter for Maruti. We decode what the road ahead looks like for the automaker. Also, stocks in focus today are Airtel, Pidilite and Nazara Tech. Well, let us get going then and get on board our expert for today. Shrikant Chauhan from Kotak Securities joins in this morning. Good morning, Shrikant. Good to have you on the show. Looking at the trade setup, well, we really fizzled out yesterday and we didn't really manage to hold on to those 18,200 levels. And today we have the expiry and it's a holiday tomorrow. What is the trade setup looking like for today? Can we expect some volatility in trade today?
Good morning everyone. I think the markets are like completely muted. It is maybe waiting for the event of budget which is due on 1st of this February. And also if we go through with the overall statistics of the market, then we are on the monthly expiry, weekly expiry. So most of the time whenever there is like a expiry sort of scenario, we see sideways activity before to that. And for that, also if we go through with the overall trading pattern of last few days, then the market is not able to cross the level of 18,200, despite there was overall strength in the US market as well as in Asian markets. So Nikkei, which was around some 25,000 levels, it moved to the levels of 27,000, 27,500. What I mean to say is that we saw 10% sort of gains for Nikkei, but Indian markets are completely flat. So one thing is very clear that we are waiting for the event, and maybe because of that we are going to see sideways sort of activity. But the positive part is that yesterday we saw the put call ratio was falling to the levels of 0.66, which indicates that the markets are turning oversold in the short term. And today, as the Singapore Nifty is indicating, if we see the market is dropping to the levels of 18,000, then there we should be buyer in the out of money call option for the next series. So broadly, we are of the view that if we see the markets are dropping to 18,000, we should be buyer in the market.
Well, if the markets drop to 18,000 level, we should be buyers into the market, but expect sideways movement ahead of the budget. Shrikant, I also want to get in your thoughts on the HDFC twins. These two counters have been in a steady uptrend and they've largely been the top movers on the index. How would you approach these two stocks now?
Yeah, in fact, they are outperforming to the entire BFSI basket as well as to the broader market. And based on their technical formation, we are of the view that they are heading higher. And we may see the levels of either 2850 on the for the HDFC Limited and close to 1800 for HDFC Bank. While looking at the weekly monthly pattern, I think there is like buying attraction, and on every deal we are seeing buying interest for the stock, especially whenever there is like recovery from the lower levels in the market. Very first, these two stocks performs. So we are of the view that we should be buyer if there is any correction, but at these levels, it is better to avoid taking any position at current levels because they are far, far away from their important support levels. In case if we see the HDFC Bank is dropping to 1660 or 1650 levels, then there we should be buyer for HDFC Bank. And for HDFC Limited, the level is 2720, 2725.
All right, those are the levels to watch out for when it comes to the HDFC twins. Let's also talk about some other stocks. Then Bharti Airtel, it has raised its minimum tariff plan in 7 circles to 155 rupees from the early levels of 99 to 111 rupees or so. If you look at the stock, recently we saw quite a bit of a downside coming in on the stock when there was a report that ruled out any kind of tariff hike in the current year as well. So going forward, do you expect this stock to head higher from current levels, given the fact that over the last 5 days it has just managed to gain to the tune of 0.5% or thereabouts?
Yeah, it looks like that it is going to move higher because the stock was around some 830, 850 levels. From there, all the way it has fallen to the levels of 750, which is its crucial support level. And since last almost 4 or 5 months, whenever the stock has fallen to 750, 760 levels, from there we saw recovery. And it lasted up to at least 820, 825. So from current levels and based on yesterday's reversal pattern, we are of the view that Bharti should do well. And if there is any lower opening in today's date, then we should be buyer with a stop loss close to 750.
Sure. Moving on to the next counter, we will talk about Triveni Engineering. The company has approved capex for sugar as well as power transmission operations. In fact, the board has also given its nod for a further 90 crore rupee capex for its sugar business and 100 crore rupees, in fact, for the power transmission ops. Going forward, how do you say that this stock is poised on the charts? I think that it has been in a downtrend over the last few days or so. Do you expect this counter to move up? And what should investors do? Should they buy into this one on dips?
Yeah, technically, if we see the stock, then it is not going anywhere. It is in the range since last 4 months. It is not crossing the level of 300. And whenever it is moving around those levels, we see some profit taking. Also on the downside, 250 to 55 is acting as very good support. So if we see the stock is dropping to those levels, then there we should be buyer. But otherwise, at these levels, we are not able to see any fresh activity in the near term. Yes, if we see the stock is moving to the levels of 300, then there we should look for taking some profit on long positions.
The next one on my list is United Spirits. It reported a weak set of numbers. In fact, profits saw a 60% decline on a year-on-year basis on the back of a weak operating performance. In fact, the revenues also fell somewhere around 25% on a YY basis. Now, looking at the counter, it's been it has fallen somewhere around 7.5% over the last 1 month or so. Even yesterday, after the numbers came out, it fell somewhere around 1.5% or thereabouts. Would you advise investors to stay away from this one at current levels?
Yeah, I think it was very clearly visible on the chart that the company is not going to report decent number because it was consistently into downtrend. It was forming a lower top, lower bottom from the highs of 940, 930, and there was hardly any pullback in between. So while looking at the pattern, I think it is going to fall further. The next level to watch out for would be 790, 800. There the stock is having support in terms of option statistics or in terms of psychological supports, but the fair levels are somewhere close to 740, 750. So if we see the stock is dropping to those levels, then there we should be buyer. But at these levels, we should be careful. If there is any long position, we can keep stop loss at 810.
Keep a stop loss of 810 on United Spirits. The next one is once again from the consumption basket, Pidilite. Even this company missed analyst expectations when it comes to its third quarter performance. Profits were down somewhere around 14%, even though revenues were up somewhere around 5% or thereabouts. This stock has been in a downtrend. If you look at the last 1 month chart, it has lost somewhere around 5% or thereabouts. What would your strategy be on this stock, Srikanth?
I think here also participants or maybe investors, they were expecting that company is going to report weak numbers, and that's the reason the stock was down. And after the announcement or after the announcement of the result of Asian Paints, we saw furthermore weakness or selling pressure for Pidilite. I think while looking at the pattern, the stock is now very close to its important support levels. It was around some 2,900 levels. From there, all the way it has fallen to 2380, 2400. Maybe from here we may see 40-50 points of sell-off, but close to 2350, the stock is having excellent support. And if the stock is already down before the announcement of the result, that means we need to be buyer. If we get any company which is from the defensive sector like FMCG, so we should be buyer close to 2350, 2360.
Buy on dips around levels of 2350 or thereabouts. That's the call on this one. The next one and the last one on my list is Nazara Technologies. It saw stellar performance in the third quarter. In fact, profit has surged somewhere around 76% or thereabouts. And the revenue growth has also been steady to the tune of 70% on a YOY basis. Over the last 1 month, the stock has given double-digit returns to the tune of 10%. What is your outlook on this one? How are the charts looking? Do you expect this upside to continue going forward?
I think the stock is stabilizing. From the levels of 1200, it has fallen to the levels of 500, 550. But since almost last 6-7 months, the stock is finding support close to 600 levels. And whenever the stock has moved to the levels of 750, 740, there we saw some selling pressure. So I think the stock is going to spend some more time within this range. But while looking at the entire pattern, I think the stock is going to do well in the near term. So again, the strategy should be to look for buying on dips.
Buy on dips is the strategy on Nazara Tech. Well, let's now shift focus to some of the viewer queries that we are getting this morning. The first one is coming in on Muthoot Finance. Vignesh has written in and he wants to know whether these would be the right levels to buy into the stock for a target price of 1,500 rupees or thereabouts. Currently, the stock is trading around 1,050 levels. What should he do, Srikanth? Should he buy into the counter just yet?
Yeah. See, in the past, most of the time we saw direct correlation with the gold prices for Muthoot Finance. But this time it is missing, and it is missing mainly because of these the overall participation in the business from private banks, and maybe that's the reason this particular stock is losing its shine. But while looking at the trading pattern, technical pattern of the stock, 1020 is going to act as very good support for it. On the high side, I think 1150, 1140 is going to act as major resistance. So upside is like limited. The strategy should be to look for exiting out of Muthoot Finance, and we should look for adding those companies which are in fact going to do well in the long run because of rise in the gold prices. We like Federal Bank, which is close to 133, 135 levels. There we are expecting further more upside. And Federal Bank is also having a portfolio for the gold financing. I think it is better to shift from Muthoot Finance to Federal Bank.
All right, Vignesh, better to shift to Federal Bank compared to a Muthoot because that is looking better on the charts. Moving on to the next one. This is coming in from Suryakanta Mahapatra and he wants to know your views on CDSL. Now, this stock is down somewhere around 10% so far this year. What is the strategy on this one? Should people buy this stock as well on dips?
Yeah, I think, see, these are the stocks where we should be buyer with a medium to long-term view. With a short-term view, we are not going to see any major activity because these are not traders-friendly stock. And already they have shown terrific run-up during 2020 to 2021. I think now they are going to take some time. Time-based consolidation is there. And after hitting the levels of 1040, 1050, the stock has started stabilizing. I think these levels are the important levels or maybe crucial levels for the stock to hold for next few days or few weeks till the announcement of the budget, because there we are going to see some activity in the market. If we see the stock is sustaining or managing to sustain above the levels of 1,000, then again we can expect 1,200, 1,250 on the higher side. But the strategy should be to look for holding this stock with a medium to long term view. And at these levels, I think it is better to stay put in the stock.
Right, before I move on to the next query, I would like to get your thoughts on Maruti, Srikanth. Stellar set of numbers, in fact, inching closer to double-digit margins now. How are the charts looking for that one, given the fact that earnings have been pretty strong and the company has been witnessing good demand for its new launches as well?
Yeah, the stock was actually under a lot of pressure since last few weeks. It was not crossing the level of 8,500, but after the announcement of the numbers, the stock has broken this level. So while looking at the technical pattern, I think the stock is heading for the levels of maybe 8,800, 8,900. But there we are again going to see some selling pressure, because the entire pattern, the broader pattern of the stock is still on the negative side. It is forming lower top, lower bottom. So if we see any strong pullback in today's date, we should look for exiting out of the long positions.
Right, and staying with the auto basket, the two-wheeler pack, TVS Motor also reported a good set of numbers. Now, over the last 1 month, this stock is down 3.5%, but in the last 6 months, we've seen gains to the tune of 12%. Would you advise someone to buy into this one?
Yeah, I think here we should be buyer, but for that we need to wait, because the stock is still indicating us that it is going to fall further. Today, maybe after the announcement of the numbers, if we see any higher opening, then there we should be careful while taking any position. In fact, we should look for reducing long positions. Close to 900, the stock is having excellent support based on retracement ratios. So wait for stock to fall to the important level. So buy on dips should be the strategy instead of taking any position on the breakout.
Buy on dip should be the strategy on TVS. Next query is from the Realty Pack. Raja Pasala has written in and he wants to know your views on DLF. He's entered into the stock at 385 levels and he wants to know whether he should hold it or exit right now, or in fact look at accumulating more at current levels. The shares have been in a downtrend. In fact, right now it's at 364. So, over the last 1 month or 6 months or so, it has gained somewhere around 2% or thereabouts. But realty shares have been in a downtrend in a rising rate environment. Would you advise him to accumulate more, or should he look at exiting at these levels?
Yeah, in the short term, the stock is definitely in the downtrend. But if we consider the medium to long term, then the stock is clearly indicating us that it is going to do well. It is in the broader trading range of 350, 340 on the downside and 450, 430 on the high side. And we are expecting stock to move to the levels of, again, 450, 430 next maybe few weeks or few months. So it will take time. But I think, again, in the budget, if something comes positive for the overall infrastructure or maybe for the real estate sector, then we can expect some activity in the stock. But at these levels, I think there is scope that the stock may again fall to the levels of 350. Ideal strategy should be to look for holding long positions with a medium to long term view.
Holding on to the long positions, that's what Srikanth is advising. The next query is coming in on the hotels sector. Satya K has written in and he says that he's been holding on to huge quantities of Indian hotels at 315 rupees and EIH at 175 rupees. He wants to know your views on these two for the next 1 year.
Okay, if there is a view of only next 1 month, then it is very difficult to say, because already these stocks or this particular sector has shown a lot of activity in last 7-8 months. Now they are into corrective mode, and after correcting to the important levels, or maybe after correcting for next few weeks, we can expect some activity. But it is better to stay in any one stock instead of buying both keeping a position in both the stocks from the same sector. It is advisable to hold on to the Indian hotels instead of EIH hotels because there we are seeing some weakness, or we are not seeing any major activity for EIH, but Indian hotels should do well. They are very close to their important support levels, and the stock can easily move back to the levels of 350. So it is better to exit out of EIH and invest more into Indian hotels.
Exit EIH and invest more into Indian hotels. That's the view on your query. Moving on to the next one. This one comes in from Maheshwar Banu, and he wants to know your views on Balaji Amines. He wants to know whether he should average at current levels, and looking at the shares, I think they've shaved off somewhere around 30% over the last 6 months or so. What should he do? Should he look at averaging at current levels?
No, I think consistently the stock is falling, and till the stock is not forming any reversal formation, it is better to stay away. Currently it is around 2350. If we just purely go through with the technical pattern, then 2100 is going to act as very good support for it, which is 50% retracement of its entire rally. So close to 2100 levels, one may look for adding or taking some contra view in the stock, but at these levels it is better to stay away.
Better to stay away from Balaji Amines. The next one is coming in from Pooja, and she has a query on SBI card. A company reported its numbers yesterday. They were pretty decent, but we saw a drop on the share prices. In fact, shares fell somewhere around 2.5% or thereabouts. And over the last 5 days as well, it's been in a downtrend only. So going forward, would you advise investors to stay away from this one, given the fact that it has been in a steady downtrend over the last 1 month or thereabouts?
No, I think it is turning more attractive because when the stock was around 1000 levels, that time it was very close to its fair value, but now it is falling back to the important support levels, and from here the upside is very clearly visible because it's a time-based correction and it is falling gradually. So maybe after hitting the levels of 740, 750 on the downside, we are expecting stock to rebound. Yesterday it was very close to those levels. Maybe with the weakness of the market, we may see the stock touching the levels of 700. But broadly, we are positive on the stock, and technically also we are expecting that stock will complete its correction somewhere close to 700 levels in the worst case scenario. So the strategy should be to look for adding more if there is any further more weakness.
Right, SBI card looking attractive. That's the call from Shrikant. On to the last query of the day. This one comes in from Naveen, and he has a query on India Cements. He wants to know whether this counter warrants an entry at current levels.
Yeah, I think certainly it's a buy at these levels because whenever the stock has fallen to 200 or 190 levels, from there we saw recovery, and it managed to cross the levels of 220, 230 whenever there is bullishness in the market. So these are the levels where we should be buyer in the stock because it's a range bound stock, and it gives opportunity after every 3-4 months to buy at important levels. I think the stock is now very close to its important support levels, and we should be buying.
Well, we should be buyers into India Cement now. That's the call. Hope that answers your query. But this wraps up the query segment for today. But before I let you go, Shrikant, do leave us with 2 of your stock picks for the day.
Yeah, I think, the markets are very clearly in the trading range, and after opening lower, we are of the view that we should be buyer in companies like mid-cap IT companies where we are seeing specific buying interest. We like Emphasis BFL, which is close to 2100 levels. We are expecting stock to move to the levels of 2200 to validate the double bottom formation. So it's a buy at current levels with a stop loss at 2070. And we also like Mahindra & Mahindra because entire auto space is showing some strain. And before the announcement of the budget, most of the time we see some activity in auto companies. We like Mahindra & Mahindra with a target of 1370.75. We can keep stop loss at 1300 for the same.
Right. Well, those are the stock picks being recommended by Shrikant. Well, with that, Shrikant, thanks a lot for taking out time and joining us this morning. It was a pleasure talking to you. Well, this wraps up today's edition of Morning Trade, but coming up next is Opening Bell with Santos, so please stay tuned.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.